Is that a paradigm shift, or is that end of global banking? How do you see that evolving last decade?
My view is that, firstly, for any individual firm that's perhaps sending those signals, that's always a factor of each bank's strategy, its own particular competencies, its own particular transfer pricing models it takes, etc. There's a range of factors that drive that for any firm. But I take the view that banking is at its best, and we're at our best when we're solving real economic problems, meeting real economic needs. And so I probably look at it more from a perspective of what are the big global megatrends. If I put my futurist hat on, what are the big global megatrends that are going to influence how we step forward and play our role in the economy? I think a lot of the stability that the world has enjoyed and the trade patterns and the efficiencies that have been generated over the last few decades are looming under threat, not only from where we look at it in conflicts and sanctions, but what's the future security and efficiency in shipping lines that we depend on as part of trade? What are the intellectual property rules around data transfers across borders? And I think these stand to really significantly shift trade patterns, and therefore a lot of the international activity that banks do in support of our customers working across borders. I think we may well need to look at rapidly standing up industries or capabilities within our economies that we don't currently have because of some of those supply chains being severed. We're going to need not only technological capability to help solve the problem, big believer in what Ravi Menon spoke about this morning, about tech being a core part of the solution to those problems. We're going to need the skills in those new industries that we're standing up, and we're also going to need capital. And so banks will play a crucial role in helping to enable those adaptations and transitions.